Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and as I like to remind you each and every week, I'm also the author of a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks. And my company, Taylor Hard Money Advisors, is in partnership with Chen Lin, who publishes What is Chen Buying, What is Chen Selling. You can put your name on the waiting list to sign up for Chen. He will be accepting new subscribers at the beginning of the next calendar quarter. And you can sign up for my letter, however, anytime at miningstocks.com. Go to both places, go to miningstocks.com to sign up for both newsletters. You can also call our office here in New York at 718-457-1426, 718-457-1426 during normal business hours in New York, and we can sign you up as a subscriber then as well. I do want to thank each of you for listening to this show, making it one of the more popular business shows on the Voice America Business Channel. I would also encourage you to continue sending along, as many of you have been doing. Thank you very much for sending along your comments, questions, criticisms, praises, whatever, to questionsfortaylor@gmail.com. Would like to also invite you to follow me on Twitter. My handle is jtaylormedia. I do want to thank our sponsors for making this show economically viable. Our sponsors for today's show are Carlisle Goldfields, Aron Resources, and Cornerstone Capital Resources. I've titled today's show, Will Gold Zoom Higher with Greece on the Brink of Default? Well, it seems to be an almost foregone conclusion that Greece will default. The question is not if, but when. And it just seems as though more and more money that is shoved down the rat hole in Greece is certainly not doing anybody any good. Well, that's not quite true. It probably is benefiting the bankers who are keeping or avoiding a default because of the massive amount of debt that is owed to the banks, and the banks are not or are so highly levered and this is the problem, of course, that the global banking system is facing, is one of enormous leverage. Well, anyway, our guests today will be Axel Merck and Michael Oliver. Axel will talk about his views on the dollar and the euro and what impact he thinks a Greek default may have on the relationship between the dollar and the euro. And, of course, we want to get his views on what that may mean for gold as well. And using his technical analytical skills, Michael Oliver will be with me in a few minutes after a first commercial break. He'll be talking about some of the major markets. He pointed out in his weekend missive, he talked about the debt markets, the sovereign debt markets, the gold and the equities markets. He believes are all in a position for a major tectonic shift, with the debt markets and the equity markets destined for a major decline, and for gold looking to turn upward again. It certainly is the largest bubble in history, and that is the sovereign debt bubble. And it may indeed be the bubble to end all bubbles in this period of massive central bank inflation that has all but destroyed free market economics around the world. Certainly. The enormous amount of indebtedness and leverage that's built into the system was made possible only when Nixon, for the first time in history, when Nixon took gold away from virtually every monetary system, every country in the world. No longer was the free market allowed to determine to any degree what it would use as a medium of exchange. As it always had for centuries chosen gold, suddenly gold has been entirely dismissed from the monetary system, and it has bred the most, I would say, the most extravagant debt bubble in history. And so the sovereign debt bubble may be, in my view, the debt bubble to end all debt bubbles. Certainly, what I am finding very interesting, in fact, is that there are a lot of mainstream articles now that are starting to pick up on this, unfortunately, this doom and gloom theme that we've been talking about. Doom and gloom in the sense that not that anybody wishes to make money by championing doom and gloom, but simply because we see the handwriting is on the wall when the laws of economics are defied, when governments start printing money, when they promise people they can have something for nothing, then certainly that will not end well at some time in the future. But what is really interesting now is more and more mainstream articles. Mainstream economists are starting to, well, at least in part, see the handwriting on the wall. I'd like to call to your attention an article that just came out from the Telegraph, written by Ambrose Evans Pritchard. This was written on the 24th. of May. It's titled, HSBC Fears World Recession with No Lifeboats Left. Mr. Pritchard quotes Stephen King from HSBC. He warns the global authorities have alarmingly few tools to combat the next crunch. Given that interest rates are already zero across most of the developed world, debt levels are at or near record highs, and there is little scope for fiscal stimulus. He quotes Mr. King as saying, the world economy is sailing across the ocean without any lifeboats to use in case of emergency. Further quoting this HSBC economist, Mr. King, Mr. Pritchard notes the following. Mr. King says that the global authorities face awful choices if the world economy hits the reefs in the current condition. The last resort may have to be, quote-unquote, helicopter money, a radically different form of QE that injects money directly into the veins of the economy by funding government spending. It is a Rubicon that no central bank wishes to cross, though the Bank of Japan is already in up to its knees. The imperative is to avoid any premature tightening or policy error that could crystallize the danger. As Mr. King puts it acidly, many, including the owner of the Titanic, thought it was unsinkable. Its designer, however, was quick to point out that she is made of iron, sir. I assure you, she can sink, end of quote. Well, not to alarm you, but I mean, the point that I'm making is that this pathology has been in the making for decades. And it was a real turning point when Nixon took us off the gold standard, when he no longer allowed any remnant of honest monetary measure, no honest weights and measures any longer in the monetary system. And so that gave carte blanche to the Keynesian economists to spend money like there was no tomorrow. It also gave carte blanche to the United States to engage in military escapades around the world and to build its empire by printing money. However, those days may be soon coming to an end. It's David Stockman. Here's another article that I just wanted to bring to your attention. I think it's very important. David Stockman wrote an article this weekend. It says, pray for the Greek accident. It will trigger the demise of the ECB and the world's toxic regime of Keynesian central banking. Anyway, David just points out that he would like to see the world recognize that the emperor is wearing no clothes, that the system is broke, that we could just get it over with once and for all and start building anew with a more sound monetary system and sound economics. But David writes, he says, the good thing, referring to the Greek default that's imminent, seemingly imminent, he says the good thing is that this whole misbegotten Euro project cannot survive the impending Greek default. The ECB is now on the hook for 138 billion of Greek liabilities, an amount that is equal to the remaining deposits in its entire banking system. Needless to say, when the impending Greek accident explodes into the front pages, there will be pandemonium at the ECB and in Brussels and the capitals throughout the 19-nation Eurozone. End of quote. Well, certainly the pathology of the Western world has not been lost on the Chinese, nor the Russians, nor others for that matter. As a matter of fact, I would like to just point out just one more article before we take our commercial break, and that has to do with one that was written by Jensen on his Bullion Star blogs, and this article is entitled "China Sets Up Gold Fund for Central Banks," and just quoting one Chinese official who said just recently, and there's apparently 100 billion yuan fund that's led by the Shanghai Gold Exchange that will be used to facilitate gold purchases for the central bank member states at the Shanghai Gold Exchange. Here is what one Chinese official said. He said, and I quote, "It's perhaps a good time for the befuddled world to start considering building a de-Americanized world. A self-serving Washington has abused its superpower status and introduced even more chaos into the world by shifting financial risks overseas, instigating regional tensions amid territorial disputes, and fighting unwarranted wars under the cover of outright lies. As a result, the world is still crawling its way out of an economic disaster thanks to the voracious Wall Street elites." End of quote. Well, it is Mr. Jensen says it is being thought that these articles are written directly by the Chinese government. Well, it certainly seems to be the case that there is going to be a major confrontation, I believe, and it's brewing. It has to do with the petrodollar, which is in competition with the petrodollar is in competition with the BRICS that are being set up by China and Russia primarily. And the more we push China and Russia, especially Russia, with sanctions and so forth, it is forced into a stronger alliance with China and the BRIC nations. David Jensen just sent out a very interesting commentary to this article that Coos Johnson wrote. And it's David says China's activity is facilitating physical gold liquidity for Silk Road countries is now in fact going beyond the BRICS. He says with its actions, China could not be more clear of its intentions to remonetize gold. It is therefore essential that we in the West prepare to remonetize gold and silver, as well as our countries will. It is therefore essential that we in the West prepare to remonetize gold and silver, as well as our countries will perish when our token-based currencies collapse on the announcement of the return of real money into the global system. End of quote. David Jensen. Well, I do hope to have David on my show, perhaps next week, to talk a little bit more about some of the events that have been taking place.